Hey everyone, welcome back to Crypto Cash. Thank you so much again for joining me here. Happy Monday to you. Hope you had a wonderful weekend. Boy, Bitcoin is trying but keeps getting canceled out every time it tries to pump. So this just shows there's a lot of selling pressure in the $100,000 range. It's no surprise really. It's kind of just that point of contention. It probably will be for a while. Having said that though, as we continue to build more volume there, that may actually end up working as a support, more positive later down the road. And we do take a look at our point of control ever since we've been in this range. We are looking at a decent amount of support here at about the 98,400 mark. Okay, so while we're below that, today's candlestick hasn't closed yet, and generally it's best to wait to kind of see how that works out. Suffice to say, we have the most amount of people buying at like the 98.5 range, and we're right in that range right now. So I wouldn't say we're in terrible shape. We're in the support zone, kind of standard stuff here as expected. What we want to look at in the back end here is kind of just some liquidation data and kind of see what's going on. Kind of go from there. And just want to say thank you again so much for always hitting that like button, commenting below. Greatly appreciate it. We're getting more views on our Bitcoin video, which is actually pretty good considering how saturated the market is. So thank you for coming to me for some analysis here, of course. Always appreciate that. So on the left-hand side, we got the last 7 days, 30 days on the right. 30-day, we're not going to look at too much. We're really going to zoom in, honestly, to the 12-hour. This is going to tell us a little bit more about the more immediate time frames. And then what we want to look at really quick on the 7-day is recognize that 96,000 upwards of 97.5 is the next area of slight concentration liquidation. It's not massive, but it is definitely piling up there. Okay, and those are late longs, also early longs too, that have liquidation levels there at that point. So just know that exists there. 96,000 is a tentative support based on liquidation. Keep in mind, liquidation is not a support level. It is just simply a gauge of where people have the most amount of, potential liquidity. And what that basically tells us is that, we could very well see that work as a support because that's an interesting or an area that people have the most interest in, right? That's kind of the reason why that works out. So don't get a mistaken. Liquidation levels are not support levels. They just generally accumulate at key level resistances or supports. Having said that, though, we can see a little bit more specific. There is still some heavy concentrations, 97.5, 97 even, 96.3, and 95.4. So there's some areas all the way down as low as 95,000 is a rough estimate that has liquidation. And keep in mind too, 94.7, 95,000 roughly, has been that support level in the recent past. It's worked out very well for us. Okay, so we can presume that'll work out. If the price ends up coming down that low, we'll have some initial support there. Keep in mind too, and we'll talk about this, that massive candle wick down to 90,000. That works similarly to a CME gap, and a lot of times you will see that get filled too. So we may even see low 90K range as a possibility. Okay. Having said that, liquidation delta here is at about minus 4, minus 5 billion. That basically just implies more people are shorting than taking longs, which makes perfect sense. I'm leaning more towards a short too if 100,000 continues to reject. We take a look here at the open interest. We can recognize that there's some pretty heavy concentrations once again at 100,000 and secondary to that 98,300. Okay, so I'm going to refresh this really quick just to see, and we are again just below that level here at 98.3. Okay, so again, interesting stuff the way that that's working out, but 98,000 and 100,000 are two like solid support ranges based on that open interest here locally. Keep in mind that was a 7-day look back. When you zoom out here, of course, it's going to go much further back from like almost that's about 2 to 3 weeks worth of control there. So having said that, we're at a Monday, so let's quickly double check our weekly time frame, see if there's any type of important divergences here. And of course, we can see stochastic pulling back. We expected that this whole time. That's not like a monumental thing though, folks. Reason why is because it's just the first push down. In other words, it's the first attempt. If we break to the second to the downside for a second time on stochastic RSI, that's a problem. We won't see that for weeks. Okay, we won't see that for months. Right. Having said that, though, if you see money flow index increasing, that generally shows support in this range, and the likelihood of losing, the 90K range is pretty low at this point. Even though there's a lot of meat left on the bone down to the downside, there's still a ton of buying pressure right now, and you got to recognize that 90K is the new 60,000 or 50,000, whatever term you want to use to describe that. It's a terrible analogy or reference, but if we take a look here, everything else is looking good. Positive SMAs there on the weekly. It's going to be like that for a while. So just keep in mind the weekly time frame, even though we glance at it occasionally. There's nothing that's going to be super telling until we break a lot of different scenarios to the downside. It's going to take a while to get there. So I wouldn't take the weekly time frame seriously, if you will, just because it's such a slow slow time frame that it's hard to really gauge what's going on. Daily time frames are better for that. Obviously, we can recognize that we rejected off 70 in the RSI here. It's a common resistance level. It takes a lot of volume to pass through that. So I'm not surprised. I mean, had we broken through it, we'd probably be running towards 110. Now we're pulling back. And that makes sense, of course, but it's nothing super crazy either. Again, I'm not super concerned with this pullback here. Majority of vaults are not responding well to that. We had to close out one of our trades early. Thankfully, we did. It's tremendously lower now. So again, sometimes you just got to pull the plug, folks. Don't just remove your stop loss and hope for the best. That's not how trading works. Take your stop loss or close your trade early like we did, and just learn from it, all right? And really, the only thing we can learn from this is just the fact that keeping a trade open throughout the weekend like that can be very treacherous, because the weekends are pretty bad. We had some weird price action yesterday when I wasn't really paying attention to the markets. I just kept getting a lot of weird alerts for unusual activity for Bitcoin buying and selling pressure. All that being said, our money flow index is lower than the RSI. Generally, that's unfavorable. Doesn't mean we're going to continue lower. It just implies that we have less money flowing in now in the last 14 days than the previous 14. So that just kind of averages out and kind of lets us know that there's not quite as much buying pressure in this exact range as we'd like to be able to maintain it. And of course, when we look at volume, we can see it dipped over the weekend, but we have a pretty high pressure volume candle here, a red candle that wicked all the way up to 100,500 and basically closed at 97.5. So it was a pretty aggressive selling candle, implying that we should experience the price action to either A, bottom out soon or continue lower. In other words, you don't just buy this dip because it's a dip. You wait for a confirmation. And I know it can be very difficult and challenging to do so, but it's not really a good conditions to try to buy right now, just based on us losing some important factors here. First of all, we're under 50 in the RSI. We haven't spent much time under 50 in the RSI recently, so this is one of the bigger dips, if you will, likely implying further downside. Same thing with money flow index pulling back and the RSI or stochastic RSI tapering off. Those are all things that are basically telling us that we should experience the price to pull back a bit further. However, we do pull out our fib levels a little bit further here too. We can kind of recognize that we're right there at that 0.5 fib level, and we got to give that a chance to provide it as a support. We saw some support here at 97, the low 97K range here previously. There's a good chance we could even see this being a double bottom and it continuing higher, right? A lot of patterns you can draw out here as potential considerations, but for the most part, we're traveling into a support zone, and we got to give it a chance to hold, right? That's generally the concept. That's how support's supposed to work. You're supposed to kind of give it a chance. So again, 97.5 upwards of 100,000. There's that support range for us. And we'll got to see if it holds first. Okay, you don't just short into a support level. It's not really a good recommendation. And you don't just take a long into support either, because there's not a ton of confirming factors letting us know that this is a safe place either, right? It's just worked fairly well in the previous past as a resistance range, and then again as a support range. So, depending on how you look at it, we should be able to hold this level, but I would say closing below 97,000 is probably a disadvantageous scenario. I'll clean up the charts here. I'll post a playout chart here shortly with kind of some clearer and more concise information. But for the most part here, folks, it does look like a little bit further downside. It would make sense, but we got to give 97K a chance to hold. We are cleanly below the cloud now, of course. Lagging spans free and clear. Conversion lines below baseline. These are not conditions to take a long position. This is technically a condition to consider a short. So hypothetically, if the price pulls back up to this 99K range, that would be a solid thought process. Again, local point of control is right at 99.5. We can kind of see that at 0.618 fib level holding as a potential resistance now. So a lot of different ways in which you could interpret this, but me personally, I think it's too late to take a short and too early to take a long. Okay. So again, patience, folks, at this point. I think if we close closer to the 98/99K range without breaking above or closing above, then there's a solid chance that we're going to see further downside. That'd be an optimal place to consider a short, just based on the cloud here and a few other confirming factors. So I'm going to wait for a short if I were to consider one, and I'm definitely not going to take a long just yet until we close above 100,000. Okay, so those are just kind of like the points of contention, things you want to recognize and be mindful of. I hope that makes sense, though, and I described that fairly correct. If you could, please comment below, like, subscribe, comment, obviously, and do yourself a favor, too. Join us over at Bitunix, folks. $12,000 deposit bonus, awesome exchange. No KYC or VPN required. Use the link down below. They have like monthly trading competitions too. We'll have one again next month. Last but not least, too, of course, join us over on Twitter, Telegram, and Discord. This is where I post my playout charts so you can kind of see what's going on. It's all available there. And again, these are some of those market warnings that we caught here. See, again, unusual buying and selling activity. You can see there's strange amounts of inflow and outflow right now, and it's generally best to just kind of avoid that. So these are not ideal trading conditions. All right, folks, thanks again for watching. Look forward to seeing the next one. Have yourself a great rest of your day. Take care.